So guys, we spoke about valuation of debt instruments in the previous class. I said any security beta valuation principle is pretty simple. You're always supposed to value it on the basis of present value of future cash flows. So you need to determine what are the amount of cash flows, and then you need to determine beta what is the discounting rate, that is required rate of return applicable. Now, for future cash flows in respect of debt securities, beta, there will not be any uncertainty because you already know what is the coupon rate, you already know what is the maturity period. So cash flows can be easily determined. Required rate of return, guys, I told you will depend on what? The risk that is involved in the security. Higher the amount of risk, higher will be your required rate of return. So we did different cases, beta. The first one was if it is a coupon paying bond. If it's a coupon paying bond, beta, you will directly write, this is accounts, 1 second. If it's a coupon paying bond as such, beta, you're directly going to value the coupon paying bond as present value of coupon payments plus present value of redemption value. So you'll write coupon amounts into present value annuity factor plus redemption value into present value factor. That is how you're going to arrive at the present value of a coupon paying bond. Next, beta, after a coupon paying bond, guys, what was the next thing that we did? Zero coupon bond, guys. The present value of a zero coupon bond will simply be equal to the present value of its redemption value. After that, beta, perpetual bond. Perpetual bond ka formula ke liye, beta, I said use present value of constant perpetuity. So you're going to write interest amount divided by your required rate of return. If it's a semi-annual coupon paying bond, I said you should take semi-annual coupon amounts and also you should divide the discounting rate by 2. So I'll be semi-annual coupon amount into PVAF at R by 2% for 2N periods plus redemption value into present value factor at R by 2% for the 2Nth period. Alright, guys. After that, beta, convertible bond. I said in respect of a convertible bond, the advantage to the person who's investing as such, beta, is that he can either opt for cash payment or he can opt for equity, whatever is giving him a higher benefit on a later date. That is why to value a convertible bond, guys, you will take interest amounts multiplied by present value annuity factor plus redemption value or conversion value, whichever is higher. After that, beta, we did floor value of a convertible bond. Floor value ke liye, beta, is said that it is the minimum value that a convertible bond can fetch. This minimum value, beta, will be derived by ignoring the conversion option. You're directly going to consider only cash option. You will not take conversion value anywhere into consideration. After that, beta, we did the concept of yield to maturity. YTM is nothing but the effective return that you will end up generating if you purchase the bond at the prevailing market price and you hold it till the end of its maturity period. To get accurate YTM, beta, is said that you will have to use IRR technique. However, approximation method mein, beta, you can directly take average annual return divided by average amount outstanding. Are we clear about this? So that will be interest amount plus redemption value minus purchase price by n whole divided by redemption value plus purchase price by 2. Then we did the concept of yield to call, guys. I said yield to call, guys, can we pay attention? Yield to call, beta, is in respect of, when I'm revising, guys, do not talk. If you want, if there's something urgent, you can leave the classroom, talk outside and then enter. Yield to call as such, beta, is in respect of callable bonds. When you say callable bonds as such, beta, these are the bonds that are issued by a company during high interest rate periods. Because there can be a decline in interest rate, the company reserves the right to buy back the bonds in case the interest rate reduces. So yield to call will be the effective return that you are generating as such, beta, if the bonds are purchased at the prevailing market prices and are held till the end of the call period. Alright, did we write notes about this? Yield to call bhi likh liya na pura? Alright, beta. Next, just write one more, beta. Holding period return. Holding period return. Holding period return. Now, when you use the word holding period return as such, beta, you are basically talking about the return that you have generated over the entire period of investment. This is not an annualized return. Holding period return, beta, jo apan compute kar rahe, is not annualized return. Say in case you buy a bond, in case you buy a bond as such, beta, say at a price of, or you buy a share but at a price of 100 rupees, you hold it for 5 years and you sell it after 5 years at a price of 300 rupees. You're buying it at 100 rupees, you're selling it at 300 after a time gap of 5 years. The total return that you have generated over a span of 5 years is how much? 200 rupees. That 200 rupees expressed in percentage will be how much? 200 divided by 100 beta, it will be 200% only. This 200% is your holding period return. You do not annualize it. You do not take time value component anywhere into consideration. Not used as such, guys, majorly because we ignore time value component altogether. What if this share has given you dividends of 10 rupees every year, beta? So over the next 5 years, guys, the total dividends that you must have realized will be how much? 50 rupees. Apart from getting a capital appreciation as such, guys, you will also get a return of 50 rupees and 200 rupees, but the total return will become 250. That 250 divided by 100 will become your holding period return again. So holding period return is not annualized return. It is a return that you have generated over the entire period of holding. Okay? Yes or no? Do we use it? No. Dekho beta. Holding period return. Yield to maturity is the effective compounded return that you are making over the entire period. But YTM can also be computed in respect of expected cash flows beta. Holding period return is only a post-mortem analysis. Matlab you have already sold the investment. Uske baad mein you are computing what is the return that you have generated. Write down, guys. Holding period return. It is the overall return generated overall return generated over the entire period of investment. Over the entire period of investment. Entire period of investment. It does not consider time value component. It does not consider time value component. ठीक है बेटा. Holding period return equals your summation of dividend or interest income. Summation of dividend or interest income plus capital appreciation divided by purchase price. Dividend or interest income plus capital appreciation divided by purchase price. Example. Purchase price 250 rupees. Dividend realized every year 10 rupees. Share was sold after 5 years. At 620 rupees. Share was sold after 5 years at 620 rupees. Share was sold after 5 years at 620 rupees. Based on this, beta, what will be your holding period return? Vansh, kitna hai holding period return? You're realizing 10 rupees beta for 5 years plus there's a capital appreciation 620 minus 250 beta. That is how much? 370 rupees divided by your purchase price beta is 270. Purchase price beta is 250. So 250 beta, so 50 plus ये कितना था ऊपर का 370 divided by 250. 420 divided by 250 beta, it is 168%. Do not write per annum after that. It is not annualized return. Yield to maturity, whatever else that you have computed are all per annum returns, guys. This is not per annum. Are we clear about this? Is that clear, beta? Is there a compulsion, beta, that your actual return that you're generating should be equal to required rate of return? Huh? The actual return generated as such, guys, need not be equal to your required rate of return. Basically, guys, will your coupon rate be equal to actual return? If I tell you that you're buying a 10% debenture as such, beta, does that mean that the actual return that you're generating is equal to 10%? Coupon rate as such, guys, will not be equal to your actual return unless you buy the debenture at face value, you sell the debenture at face value, and the only return that you're generating is in the form of coupon rate. Otherwise, as such, guys, coupon will not be equal to your actual return. Just because the coupon rate of a debenture is 11%, that does not mean your actual return is also 11%. Are we clear about this? Your actual return, beta, again, need not be equal to your required rate of return. That is why as such, beta, your current market price as such, guys, need not be equal to fair value or intrinsic value. If you're discounting cash flows at required rate of return, you will end up arriving at the fair value of a bond. If you use the current market price and compute your return, you will arrive at actual return. If a bond is trading at, say, guys, 920 rupees, I use that 920 rupees to arrive at the return that I have generated. I will be computing what? The actual return that I'm realizing from that bond. But if I tell you that the required rate of return is 12%, how will you arrive at fair value? By discounting all the future cash flows at 12%. Discounting cash flows at required rate of return will give us what? Fair value. Using prevailing market price, the return that you compute is your actual. YTM is computed beta using the prevailing market price. The whole definition of YTM is that only. If you purchase the bond at the prevailing market price and you hold it till the end of the maturity period, what is the effective return that you are realizing as such beta becomes your YTM. Yes or no, guys? दोनों का difference समझ में आ रहा है? Not just bond valuation, any other chapter, guys. There's no, even in your capital budgeting beta, there's no compulsion that IRR should be equal to discounting rate. Is there a compulsion that IRR should always be equal to your required rate of return, guys? Projects will have positive NPVs. If they have a positive NPV, that means actual return generated is more than the required rate of return. Even here, beta, there's no compulsion that actual returns should be equal to your required rate of return. Are we understanding this? Yes or no, guys? Likho beta next note बोल के. Note. If we discount cash flows at required rate of return, if we discount cash flows at required rate of return, if we discount cash flows at required rate of return, we will arrive at the fair value of the bond. If we discount cash flows at the required rate of return, we will arrive at the fair value of the bond. Such fair value need not be equal to the prevailing market price. Such fair value need not be equal to the prevailing market price. Such fair value need not be equal to the prevailing market price. If there is a mispricing, if there is a mispricing, if there is a mispricing, actual return, actual return, actual return will be computed, actual return will be computed, actual return will be computed using the prevailing market price. Actual return will be computed using the prevailing market price. Next line. Also, actual return need not be equal to coupon rate. Actual return need not be equal to coupon rate. Actual return need not be equal to coupon rate. As there can be capital appreciation component. As there can be capital appreciation. Capital appreciation. As there can be capital appreciation. Example. Example. 11% debenture of 11% debentures of 1000 rupees. 11% debentures of 1000 rupees with a maturity of 5 years. 11% debentures of 1000 rupees each with a maturity of 5 years. Maturity of 5 years is trading at 960 rupees. Is trading at 960 rupees. Required rate of return. Required rate of return. Required rate of return is 11.5%. Required rate of return is 11.5%. Compute fair value and YTM. Compute fair value and YTM. To compute fair value, guys, you will directly discount all the cash flows at a return of 11.5%. To compute YTM, you will have to use the prevailing market price of 960 rupees. All right. So first arrive at fair value, better. Coupon rate is कितना बोला था मैं 11% ना हाँ. So 110 rupees will be your coupon amount every year for the next 5 years, and you will also get an amount of 1000 rupees at the end of 5th year. So fair value will be 110 multiplied by PVAF at 11.5% for a span of 5 years plus 1000 rupees into present value factor at 11.5% for the 5th year. 981.75. $981.75 beta is the fair value of the bond. So if the bond is trading at 960, will you buy the bond? Yes, it is underpriced as such beta. You will end up generating a higher return. Yes or no? To compute YTM, guys, you can use the shortcut method. It will be interest amount plus redemption value minus purchase price divided by n, whole divided by redemption value plus purchase price by 2. कितना है बेटा YTM? 12.04. देखो आ गया निमित वो 981. Exact. Why are we getting confused? Whether the bond is selling at 960, matlab the prevailing market price of the bond is 960. In case you want to buy the bond, it will be at a price of 960 rupees. Selling at 9. Redemption by default will be at face value. वो 1000 rupees you're not getting today. You will get after 5 years from the company. The company is going to redeem the bond at par value, 1000 rupees. So this beta will be 110 plus redemption value is 1000 minus purchase price is 960 divided by how many years? 5 years. Whole divided by 1000 plus 960 divided by 2 beta. So that'll be 118 in the numerator divided by 980. The return is 12.04%. You will be effectively generating a return of 12.04% per annum. Yield to maturity is per annum only. Any return that we compute as such beta by default is per annum except for holding period return. But they do not even ask questions on that. एक तो जगह आएगा इसीलिए पढ़ाया. Are we all clear about the relation between these two guys? So if you use required rate of return, you will end up arriving at fair value. If you use the prevailing market price, you can compute actual return. YTM. Is everyone done with these calculations? Fair value is greater than the current market, or current market price is lower than the fair value, it is preferable to buy. If fair value is more, that means required rate of return is less. Buying anything at a lower price beta will give you a higher return. Are you all done with this, guys? Let's start solving the questions beta. Now you'll shift to the other notebook in case you're carrying one. You will solve few questions and then come back to the concept book, guys. क्या हुआ? हाँ, जोक मार रहा है. Yes, kids. Online live students, in case you did not receive the materials beta, the question is on the screen. You can read the question. First one, guys. The nominal value of 10% bonds issued by a company is 100 rupees. So here beta face value of the bond is 100. Coupon rate is 10%. The bonds are redeemable at 110 rupees at the end of year 5. अगर ये 110 नहीं देता, by default, what will be the redemption value? 100 rupees face value. But here it is specified better that the redemption value is 110 rupees. You're required to determine the value of the bond in 4 cases. What if the yield is 5%, 5.1%, 10% and 10.1%? You have to just discount all the cash flows as such at these 4 different rates to arrive at the value of the bond. All right? Pretty simple, right? No idea, sir. Face value beta is 100. Coupon rate is how much? 10%. Therefore, your coupon amount beta is going to be 10% of 100 rupees, that is 10 rupees. Redemption value beta is 110 rupees. Face value 100, coupon rate 10%, coupon amount 10 rupees. Redemption value is 110. Arrive at the return values better. First one at क्या है वो 5% है ना. The first case, guys, is value at 5%. You're going to discount all the cash flows at a rate of 5%. 10 rupees into PVAF at 5% for 5 years plus 110 rupees into present value factor at 5% for the 5th year. You will discount all the future cash flows better at a rate of 5. You'll have to do it 4 times. 5%, 5.1%, 10% and 10.1%. Yes, but what is the value that we got, guys, here? 10 into PVF and 110 into present value factor. How much is this? 129.48. Did you all get these values better? Next is at 5.1%. You will have to again discount all the cash flows at 5.1%, arrive at the value. It will be 10 rupees into PVAF at 5.1% for 5 years. Irrespective of your discounting rate, cash flows are not going to change. 5.1% for the 5th year. How much did we get this? 128 point. You got the answers? You directly wrote values. Oh my god. At 5% it is 129.48, guys. At 5.1% it is 128.95. At 10% beta, what is the value? 106 point. One not 6.21 rupees is the return, is the value that you will place on the bond. 10.1% पे भी हो गया, कितना आया? The value of the bond, guys, at 10.1% will be 10 rupees multiplied by PVAF at 10.1% for the 5th year plus 110 into present value factor at 10.1% for the 5th year, guys. 108. 105.8, guys, is the value of the bond. Got it? Exam lo kuda atlane rastava. डायरेक्ट आंसर्स लिखी हो, फर्स्ट बिट, सेकंड बिट, थर्ड बिट, और वो भी एक लाइन में. उसका पूरा आंसर एक लाइन में खत्म हो गया. यस बेटा, वी ऑल डन विद दिस. साइराम कैलकुलेशन हुआ कौन से में? 10% वाले में सारे नहीं आए. कितना बेटा कैलकुलेटर क्या है मतलब? Did you compute 10 into PVF at 5% for 5 years first? How much did you get that as? 10 rupees into PVF at 5% for 5 years. 133. एक बार ये बोल 10 into PVF कितना है? You'll take 1.05 divided by twice equal to 5 times and then GT. देखो PVAF कितना आया है? जरा एक बार करके बोलना, अभी वापस शुरू कर, वापस स्टार्ट से. PVAF at 5% for 5 years. चाहिए PVAF 5% 5 years. I want the value. उसको 4 point. वो कुछ और कर रहा है इसलिए. कितना है बेटा PVAF at 5% for 5 years? 4.3239. 4.33. Correct. So you'll multiply that by 10 rupees beta. You'll get 43.3. Next, present value factor at 5% for the 5th year. 0.78 into 110 beta. 86.187. अभी एक बार ऐड कर दोनों को. 86.187 and 43.3. कितना आया अभी? अभी करेक्ट आया. तब से क्या कर रहा था बेटा? तो 129.48 is a value at 5%. At 5.1%, 128.95. तो कुछ गलत कर रहा था क्या तब से? ठीक है, anyways, अब समझ में आ गया ना? So guys, the values, but is anyone still doing this? Kaushik, అయిపోయిందా? Next question చేస్తున్నావా? నువ్వు కూడా అరే ఆగండి, ఎక్కడ వెళ్ళాలి మీకు? Yes, kids. Huh? Shall we start the next question? Vidi, shall we start the next one? You're solving already? Second question, guys. A 5,000 bond, rupees 5,000 bond with a 10% coupon rate matures in 8 years. So when they mention rupees 5,000 bond better, this 5,000 rupees becomes face value of the bond. Coupon rate is 10%. This is going to mature in 8 years. It currently sells at 97%. Whenever the market price is given in percentage, currently sells matlab this is market price. It does not mean redemption value is so much. 97% beta will always be as a percentage of face value. Whenever prices are given in percentages, it will always be as a percentage of face value. Is this bond a desirable investment for an investor whose required rate of return is 11%? Your job is to determine fair value at a discounting rate of 11%. Compare that with the prevailing market price. If the prevailing market price is less or equal to fair value, you are going to buy. If the prevailing market price is more than fair value, you are not going to buy this bond. Are we clear? जैसे जो example लिखे थे बेटा concept notes में last वाला, same thing. Discount all the cash flows at 11%, arrive at fair value beta, and then compare with current market price. Alternatively, you can also compute YTM and compare with required rate of return, but preferably compute prices because that will be more accurate. तुम्हारा YTM using shortcut method beta can have an approximation error. So that is why in the exam it is always better to arrive at fair value and compare with current market price rather than computing YTM. Write the given details properly. Face value is anta kuda oddu sir 5,000 anta kuda oddu kada. Coupon rate beta is how much? 10%. So what will be your annual interest amount? Annual interest amount beta is going to be 500. Maturity guys is Maturity beta is 8 years. Next, current market price. Current market price beta is 97%. जब भी percentage में देता है, I told you that it is always as a percentage of face value. So that'll be 97% guys of 5,000 rupees, 4,850. Required return beta is, required rate of return is 11%. कौन है पेन के साथ खेल रहा? Required rate of return beta is 11%. So how will you arrive at fair value? Fair value guys will be equal to 500 rupees multiplied by PVAF at 11% for 8 years plus 5,000 into present value factor at 11% for the 8th year. Sairam will answer first. Even if you're done beta, please wait. हो गया सुजल तेरा? Yes beta. Sairam आया क्या आंसर? Total 4,000. How much is the first component beta? 500 into PVAF at 11% for 8 years. कोई PVAF लिखा बुक्स में अलग से? 2573.06. दूसरा वाला कंपोनेंट बेटा 5,000 इंटू वो 2169.63. दोनों का टोटल बेटा 4,769. 4,742.69 guys is the total present value or fair value of the bond guys. All right guys. What's the current market price? 4,850. Is the bond overvalued or undervalued? Overvalued. It is selling at a higher price. Fair value is less, prevailing market price is more better. As current market price is more than fair value, you should write that conclusion better. As the current market price is greater than fair value, the bond is overvalued. The bond is overvalued. We should not purchase it. We should not purchase it. Are we clear about this? Write the conclusion better that the bond is overvalued. We should not be buying the bond. Neha, which question? 10th one. You wrote 10 lines, no? You wrote the second one properly. Yes, better. ठंडी लग रही है. नहीं मैं बंद करता हूँ यहाँ से. बैठ जा. Kids, are we all done? सायराम हो गया बेटा. डिड यू राइट द कंक्लूजन? नेक्स्ट वाला सॉल्व कर रहा है क्या? तो ये कंक्लूजन लिख लो बेटा. अभी ऑल डन. नेक्स्ट गाइस. A rupee 100 perpetual bond has a current price of 90. Coupon rate of interest is 12%. Relevant discounting rate is 16%. Calculate the value of the bond should it be purchased. Same way better, you will have to arrive at fair value of the bond by discounting the cash flows at 16%. Because this is a perpetual bond, guys. What will be the present value of the perpetual bond? Cash flow divided by required rate of return. Your cash flow will depend on the coupon rate. Coupon rate is 12%. Face value of the bond is 100 rupees. Coupon rate is 12%. So annual cash flow will be 12 rupees. 12 divided by 16% will become the fair value of the bond, 75 rupees. But the prevailing market price beta is 90. Is it overvalued or undervalued? Overvalued. The bond beta is overvalued. लिखना है वो सब. Face value of the bond beta is 100 rupees. Coupon rate is 12%. So your annual interest amount beta will become 12 rupees. It's a perpetual bond, guys. So required rate of return कितना है? 16%. Fair value of the bond beta is cash flow divided by required rate of return. Your cash flow beta is 12 rupees. 12 rupees divided by 16%. That will be how much? 75 rupees. Fair value beta will be 12 divided by 16%. That is 75. What is the prevailing market price? Current market price beta is 90 rupees. Online live students, I hope you're all solving better. Current market price is 90 rupees. Therefore, the bond beta will be overvalued. Do not buy. Bond is overvalued, guys. We should not be purchasing the bond. Are we all done with this? प्रिंटिंग मिस्टेक है बेटा नेक्स्ट वाले में. क्या प्रिंट नहीं हुआ वहां पे? केशव का नाम. हाँ. Current market price beta is more than fair value, therefore the bond is overvalued. Is anyone still solving this? Are we all done with this? तुम लोग कैलकुलेटर पे इतना मारते जा रहे हो, तुम लोग नेक्स्ट क्वेश्चन कर रहे हो. यार बोलो ना यार, मेरे को लग रहा है तुम लोग अभी भी यही मार रहे बोल के. आई वाज वंडरिंग इसमें प्रेजेंट वैल्यू परपेचुटी में क्या इक्वल टू मारते जा रहे हो बोल के. फोर्थ क्वेश्चन गाइस. A 5-year zero coupon bond yields 7%. Find its market price today and after 1 year. You can assume any redemption value, guys, and accordingly compute any matlab beta, preferably either 100 or 1000. Please do not assume redemption values like 448.23 bolke. Assume some redemption value, guys, and arrive at the present value. What do we assume beta here? Assume face value is 100 rupees. Assume face value beta to be 100 rupees. Read the next question, guys. मतलब ये हो गया तुम्हारा? Kids, what did you get, beta? What is the value of the bond today? शर्मा क्यों रहा तू? Face value beta is 100 rupees beta. Your required rate of return कितना है? Required rate नहीं बेटा, ये YTM है. Yes or no? Yield दिया हुआ है. If you discount cash flows at yield, guys, you will not arrive at fair market value beta. You'll directly arrive at current market price, actual price. इसीलिए requirement beta was to compute market price. Yes or no? ठीक है, doesn't make a difference, guys, but just बोल रहा हूँ because the wording used is yield. If you discount cash flows at yield, you will directly arrive at prevailing market price. It will not be fair value. So what is your market price beta today? You will write present value of redemption value. There will be no other cash flow because it's a zero coupon bond, guys. So that directly beta will be 100 rupees multiplied by present value factor at 7% beta for the 5th year. ₹100 into present value factor at 7% for the 5th year, guys. How much is that? 71.298. 71.298 beta would be the prevailing market price. Did you all get this? $71.298. This is on the current date beta today. What do you think will happen after a year? After 1 year beta, market price is equal to, you will have to discount cash flow at what, for how many years? 4 years. 100 rupees into present value factor at 7% beta for the 4th year. Why 4 years beta? Remaining maturity will be 4 years. Remaining maturity beta is 4 years. That is why you will have to discount cash flows for the 4th year. 100 rupees you're going to realize after 4 more years. Enta idi? 76.29. Okay. You can alternatively directly add 7% to 71.298. But remember, because it's a zero coupon bond, you will only add 7%. Agar wohi coupon paying bond hota na, I have to also make an adjustment of coupon amount. Add 7% minus the amount of coupon. That will give us the effective value. Are we clear about this? Saira, I'm done with this. आगे values आगे. Done beta. I forgot your name. Yeah. Huh. Done with this, no? Is everyone done? Shall we start the next one? IDBI is issued a deep discount bond for a maturity of 20 years. Par value of 1 lakh rupees. What will be the value of the bond if the required rate of return is 12%? A deep discount bond is exactly the same way as a zero coupon bond. There will not be any coupon payments every year. The bond will be directly redeemed at face value at the end of its maturity period. So the face value of the bond is 1 lakh. You're going to receive that 1 lakh after how many years? 20 years. You're supposed to discount all the cash flows better at 12%. You will have to discount all the cash flows at 12%. After fifth, we'll solve the sixth one first. Sorry, seventh one. उसके लिए बोलने की जरूरत. After fifth, beta, we'll solve the seventh question. Pehle, all of you finish the fifth one, guys. Discount the cash flow directly for a period of 20 years. हो गया, वो भी हो गया. कितना आया? Same answer. तुमको आया? वेदिका डन? कौन सा वाला? फिफ्थ वाला? फिफ्थ वाले का आंसर पूछ रहा हूँ मैं. 10,366 rupees. हो गया निमित तेरा भी? Niharika done? Which in the 10,366? तेरा भी हो गया लक्ष्य? 10,366 rupees beta is the fair value of the bond. Skater done? It's a deep discount bond beta. Face value is 1 lakh. Maturity period is 20 years. Required return beta is 12%. Fair value of the bond will be equal to the present value of redemption value. So that beta will be 1 lakh rupees multiplied by present value factor at 12% for the 20th year. 1 lakh multiplied by present value factor at 12% for the 20th year. This will give us the fair value of the bond, guys. How much is this? 10,366.68. 6768. 66. Huh? This will be the fair value of the bond, guys. Arrive at the present value factor for the 20th year, multiply by 1 lakh rupees, you're going to get the value of the bond. किसमें? सेवेंथ वाले में डाउट है? पूछ ले किसी से, पीछे वाली बोलती है. मुस्कुरा रहा है तो दीदी है तेरी. यस बेटा. दर्शन आ गया आंसर. 10,366. आ गया आंसर है. Is everyone done with this beta? Can I start the next one? Question number 7 beta next. Here's a rupee 100 par value bond bears a coupon rate of 14% and matures after 5 years. Interest is payable semi-annually. Compute the value of the bond if the required rate of return is 8%. You will have to take semi-annual coupon payment. You will have to divide the discounting rate by 2. It is 8%. That means it will be 4% for every 6 months. By default, the discounting rate is per annum. Divide by 2, you will get 4%, guys, for every 6 months. Gadi. You have to divide the discounting rate also beta by 2. क्या करे directly 8% पे discount कर दे? How मतलब? It doesn't matter. Guys, what is this? He says because 14% divided by 2, coupon rate is 7% for every 6 months. 8% also should have been for 6 months. 8% beta by default is per annum. If nothing is given beta, rates are always per annum. This is what you have learned beta right from foundation. Many things does not make sense as such beta. क्या विधि है केशव? हाँ. Online students, if you're solving better, take the face value as 100 rupees, coupon rate is 14%, divide that by 2. Your semi-annual coupon amount would be 7 rupees. Discounting rate also should be divided by 2, guys. You will have to discount the cash flows at 4%. It is 5 years, so total number of periods beta will be 10. అయిందా నేహా ఇది కూడా ఎంత వచ్చింది 124 124.3 हाँ तेरा भी हो गया क्या कृष्या हो गया तेरा नकुल डिस्टर्ब चेक पिल्लल के क्या हुआ निमित डन पूरे हो गए चारों उतना कौन से किसके बारे में 5 years maturity period beta, assume face value is 100. Because market price is closer to 100, face value will be 100 rupees. Redemption yield matlab yield to maturity. YTM compute karna hai. Redemption yield is nothing but YTM, guys, for the fourth bit. Someone is solving. First bit, guys, did you all get the answer? Question number 7 beta, first bit. Face value of the bond is how much? Good, 100, guys. Coupon rate beta is 14%, but this is payable semi-annually, half yearly, guys. So what will be your half semi-annual coupon payment? Semi-annual coupon payment, guys, is going to be 100 into 14% beta into 6 by 12, that is 7 rupees. Your required return beta is 8% per annum, so that will be 4% for every 6 months. I told you beta, you will directly divide the discounting rate. Do not use the concept of effective yield and all of that. Maturity period is how many years? Maturity period is 5 years, so that means there will be how many semi-annual periods? 10 semi-annual periods. Maturity period is 5 years, which will be 10 semi-annual periods. Are we clear about this? आ गया बेटा, ये आंसर आ गया है. प्रेजेंट वैल्यू कंप्यूट नहीं किया, you did not get calculator. अरे कुछ भी नहीं है, डिस्काउंट करना है बस. डिस्काउंट 7 rupees बेटा for 10 periods and 100 rupees for the end of 7th period. At the end of 10th period. The fair value, इसके पहले के क्वेश्चन समझ में आ गए पूरे. Fair value beta would be 7 rupees semi-annual coupon payment into PVAF at 4% for 10 periods. plus 100 rupees into present value factor at 4% for the 10th period. Understood? ₹7 into PVAF, 4% for 10 periods, 100 rupees into present value factor, 4% for the 10th period. अंबिका हो गया ये? कितना आंसर? कौन सा वाला है? फर्स्ट बिट गाइस 120.33. 124.33 guys will be the fair value of the bond. $124.33 is the fair value of the bond. Are we clear about this? रुचिका हो गया तेरा ये? एक 2-3 क्वेश्चन सॉल्व करना क्या आ जाता. Yes kids. Are we all done? Second bit better. A bond of rupees 10,000, that is face value 10,000, bearing a coupon rate of 12% and redeemable in 8 years at par. At par देने की जरूरत नहीं थी बेटा. By default they're all redeemable at par value only. Is being traded at 10,600. Find out the YTM of this bond. You can directly use the shortcut method better to arrive at YTM. The fact that the bond is trading at a higher price, your return will be less than coupon rate, 12%. Won't you end up losing on capital better? You will get a coupon of 12%, but then because you're paying a higher price than 10,000 rupees, you will lose out on capital part and your return will be less than 12%. We'll write those relations later. अभी के लिए compute YTM. कितना है YTM? 10.92%. हो गए पूनम पूरे तेरे भी? All the 4 bits are 10.92% guys is your yield. पूरे हो गए? Second bit better, directly take a face value of 10,000 rupees. Coupon rate is 12%, maturity 8 years, prevailing market price 10,600. So based on that beta, second bit, face value is 10,000 rupees. Coupon rate beta कितना था? 12%. So annual coupon amount beta is going to be 1,200 rupees. Maturity period is how many years? Maturity period beta is 8 years. Maturity is 8 years. Current market price is 10,600. You will use this to arrive at YTM beta. So that will be your interest amount plus redemption value minus purchase price divided by N, whole divided by redemption value plus purchase price by 2. Your interest amount guys is 1,200. Redemption value beta will be 10,000 minus 600 divided by 8, whole divided by 10,000 plus 10,600 divided by 2. So you will have numerator में minus 75, so 1125 divided by 10,000, 300, 10.92% per annum. Your effective return beta would be 10.292% per annum. Check the values. Yes, beta. Online students, I did not check that you guys were commenting here. Huh? ठीक है. Did you all get this answer? Are we all done? Next, guys. Third bit. You have purchased a bond for rupees 1000. Regard that. You have purchased a bond for rupees 1000 with a coupon payment of rupees 250 and sold it for 1200. What is your holding period return? So you've made an interest income of 250 rupees, guys, plus there is a capital gain of 200. Put together, the total return will be 450. That 450 beta you will divide it by your purchase price. Purchase price is 1000 rupees. So your holding period return will be 45%. If you sell the bond for rupees 800 after receiving 250 as coupon payment, then what will be your holding period return? Here you're going to make a loss beta of 200 rupees. Adjust that from your coupon amount of 250. Your return will only be 5%. Third bit, guys. Purchase price beta of the bond is 1000. Total coupon payments, total coupon receipts beta, that is 250 rupees. First case में बेटा selling price कितना है? 1200. You're selling it at 1200, guys. So your holding period return will be equal to period return beta will be equal to the amount beta would be interest amount, which is 250 plus capital gain, guys, 1200 minus 1000 divided by your purchase price, which is 1000. It is summation of all interest receipts plus Pn minus P naught, that is capital appreciation divided by P naught. So this beta will give us an effective return of 45%. Do you all get this? Second case में बेटा selling price is how much? 800. If the selling price is 800 beta, you will be incurring a capital loss of 200. So 250 beta plus 800 minus 1000 whole divided by 1000. It will be 5%. Your holding period return in the first case is 45%. Second case it is 5%. सबका हो चुका है ये भी. They do not normally ask holding period return as a part of bond valuation, guys. We will see that in mutual funds chapter. %45 and 5%. Clear, kids? लास्ट वाला भी हो गया. Question after this. तो क्या होता, ऐसे ही बहुत सारे चीजें हैं तेरी लाइफ में. Guys, debate beta. 15% conversion bonds redeemable at par in 2003 were quoted at 95 rupees in 98. Then what is the redemption yield? Redemption yield, guys, is nothing but YTM. Redemption yield is nothing but your YTM. If you hold it till the end of the redemption period, what is the yield that you're going to generate? Isn't that yield to maturity? The time gap beta should be considered as 5 years. 2003 mein it is redeemable. We are buying the bond in the year 1998. So the time gap beta will be 5 years. It will be end of 1998, end of 2003. अब थोड़े बच्चे रहते हैं उल्टा assume करते हैं. Sir, how about we assume beginning of 98 and end of 2003? If you do that, time gap will become 6 years. Please do not do that beta. It's either end and end or it is beginning and beginning. We'll have to directly take the time gap as 5 years. Do not take the time gap to be 6 years. So you're buying the bond beta at 95 rupees. That will be your purchase price. Annual coupon payment will be 15%. That will be 15 rupees. You will have to compute your YTM. How much will be your YTM, guys, here? 16.41%. 16.41% beta will be your YTM. Darshan bahar ko ek baar dekhna please. 16.41% beta is your YTM. Any doubt in this? Huh? Divided by life of the project. Divided by 95 यहाँ पे. तो accurate IRR कर रही है. Well. Yes, beta. Yes, kids, have you all done? Fourth bit beta. क्या लिखे guys? What is the current market price? Current market price is 95 rupees beta. What is the face value of the bond? It is given, right? Assume 100 beta because the face value of the bond, guys, is closer to the, sorry, current market price is closer to 100 rupees. You will have to take the face value to be 100. What is your coupon rate, guys? Coupon rate beta is 15%. Are we clear about this? What is the maturity period? Maturity period beta is 5 years. Therefore, YTM as such beta will be equal to interest amount plus redemption value minus purchase price divided by n whole divided by redemption value plus purchase price by 2, guys. Your interest amount is 15 rupees plus 100 minus 95 divided by 5 years whole divided by 100 plus 95 by 2. How much will this be, guys? 16 divided by 97.5. 4? 16.41% per annum. 16.41%, guys, will be your YTM. Irrelevant. We have no details beta. The word conversion in the question will have no significance beta because we do not have any other details here. So you'll have to assume them better to be normal coupon paying bonds only, non-convertible. The YTM here, guys, is 16.41%. Any doubt in this? हो गया बेटा ये? Question number 8, guys, if you're all done with this. Eighth question. ACFA is planning to issue a debenture series on the following terms. Is everyone done with the previous question? तुम लोग कौन सा 8th वाला ही कर रहे हो? It is planning to issue a debenture series on the following terms. Face value 100, term of maturity 10 years. For the first 4 years, coupon rate is going to be 9%. After that, next 4 years, coupon rate is 10%. Last 2 years, coupon rate is 14%. You will have to discount all of these cash flows separately. First 4 years ka PVAF alag, and then 5th to 8th year, and then 9th and 10th year. The current market rate on similar debentures is 15% per annum. The company proposes to price the issue in such a manner that it can yield 16% compounded rate of return to the investors. Though the prevailing market price, beta market interest rates are 15%, we will want to offer how much return? So to determine the issue price, beta, you will have to discount all the future cash flows at an yield of 16%. You will have to discount all the future cash flows at an yield of 16%, but not at 15%. 15% के हिसाब से fair value आएगा, but we are not offering 15% return, we are offering a higher return. Is that clear? The company also proposes to redeem the debentures at 5% premium on maturity. So you'll have to take redemption value to be 105 rupees. एक sentence लिख लो बेटा. Write a note of that 16%, guys. Though the prevailing yield is 15%, though the prevailing yield is 15%, prevailing yield is 15%, issue price should be determined, issue price should be determined, issue price should be determined using the return to be offered to the investors. Using the return to be offered to the investors. Using the return to be offered to the investors. That is 16%. 16%. Fair value will be based on 15% discounting rate. Fair value will be based on 15% discounting rate. Fair value will be based on 15% discounting rate. 15% discounting rate. Clear hai? Alright guys, now you can start discounting all the cash flows better. Question number 8. Face value of the bond is 100 rupees. Redemption value is at 5% premium, so that will be 105 rupees. Maturity period is 10 years. face value 100, redemption value 105, maturity period is 10 years. कूपन अमाउंट्स बेटा ईयर 1 to 4 कितना हो जाएगा 9% of 100 9 rupees. Years 5 to 8 guys it will be 10% of 100 10 rupees. Year 9 and 10 beta it is going to be 14% of 100 beta that is 14 rupees. Your coupon amounts are going to be 9 rupees 10 rupees and 14 rupees. 9 for the first 4 years, 10 for the next 4 years and 14 rupees for the last 2 years. You have to discount all of them better at an yield of 16%. ₹9 into PVAF at 16% for the first 4 years. ₹10 into PVAF at 16% for the 5th and the 8th year. 5th to 8th year guys, and then ₹14 into, I'm writing separately beta, present value factor at 16% for the 9th year, and finally beta 14 plus 105 into present value factor at 16% for the 10th year. You have to discount ₹9 for the first 4 years, ₹10 for the next 4 years guys, and उसके बाद में 9th year and 10th year. To compute annuity factor for 8 years beta, 5th to 8th year you can write PVAF at 8 years minus PVAF for 4 years. That will directly give us PVAF for 5th to 8th year. You can take annuity factor for 8 years and deduct the annuity factor for the first 4 years. जरूरत नहीं है बेटा, बॉन्ड वैल्यूएशन के लिए कोई जरूरत नहीं है, जब वो चैप्टर्स आएंगे तब बताऊंगा मैं. For this it is not required. पूरा हो गया. Someone please make a note of annuity factors as well beta. Annuity factors भी चाहिए मेरे को पूरे. लिखे तुम लोग. Arrive at the answer guys. All right, kids. Yes, beta. What's the value of the bond? Beta, ఇది reunion కాదు. అర్థమైందా? You want to go sit with them? All right, kids. So, what is the present value annuity factor for the first 4 years, guys? 2.7982. Next, beta, you will write 10 rupees into what is the PVA for 5th to 8th year? 1 point. I know, I understood. 1.51. 5453. Next, beta, 9th year का सिर्फ present value factor कितना है? 0.2629 plus this 119 rupees into present value factor for the 10th year. 0.22. 0.2267. How much will this be, guys? 71.29. 71.25 to 71.30, guys, whatever answers that you have got. It can be 71.25, 26, 27, 28, 29. మైక్ ఇవ్వాలా సార్ మీకు? Are we all clear about this? नाइन्थ और 10th ईयर का क्या समझ में नहीं आया? कहां से आया बोल के? That's the present value factor for the 9th year and the 10th year. See beta, you're getting 14 rupees in the 9th year, so that is why you're multiplying it by the present value factor of the 9th year. In the 10th year, you're not only getting your interest amount, but you're also getting a redemption value of 105 rupees. Right. So you are multiplying both of them with the present value factor for the 10th year. एक ही साल का फैक्टर है ना बेटा वो. Only for the 9th year. I would have used the word annuity factor if it was for multiple years. I'm receiving 14 only in the 9th year, not for the first 9 years. ఎంత మాట్లాడుతున్నారు అందరూ? Check the valuations beta. Sairam calculation आया. Tejasri done with it. You got the value 71.2627. You're doing it. I'm waiting beta. Pranav, कोई नाम पहचाना मिला बेटा बुक में? फिर प्लीज अराइव एट द वैल्यू गाइस. क्या हो सायराम, पूरा स्ट्राइक करते जा रहा तू? गलत हो गया ये. कितना है आंसर? देखो नहीं आया 71 पॉइंट. वो प्रेजेंट वैल्यू फैक्टर्स नहीं आए. Just 1 or 2 more minutes guys, let them solve. Sir, can we do it through YTM? Assuming yield is 15% and purchase price is issue price. Azaz, nahi beta, you cannot do that. Guys, if they give us yield, do not use YTM ka shortcut formula and take purchase price as missing figure because it will result in approximation error. Alright. तो अपना amount है बेटा, it will not be correct. Do not forget वो YTM का formula बेटा is approximation only. That is why you should always discount. Whenever yield is given and they ask us to compute price, always go by present value only. That will give us the most accurate answer. उसका doubt समझे? YTM formula में he says we will take purchase price as missing figure and then compute it. Do not do it. In this case coupon amounts are different बेटा, देखो average coupon लेना पड़ेगा अगर YTM का formula भी use कर रहा है तो shortcut method. तू भी वही करी purchase price missingly. ठीक है, उसका नाम बोलो क्या, दोनों कनेक्ट करते. All right guys. ओ अरे घरियो क्या डिस्कस कर रहे हो बेटा इतना? प्रेजेंट वैल्यू फैक्टर कैसे कंप्यूट करना बोल के? Guys, you can also use M plus beta if you do not want to write PVA for 8 years minus PVA for 4 years. जब फिफ्थ ईयर फैक्टर से शुरू करो, you can price M plus beta for 5th, 6th, 7th, 8th. That will give us annuity factor beta at 16% for 5th to 8th year. आ गया मानसी देखो या अभी भी नहीं है? आंसर मैच हो गया? नेक्स्ट क्या है? कहीं जाना है? देखो सो जाना बेटा, 2 मिनट का टाइम दे रहा हूं तो सुबह जब पढ़ा रहा था तब सो रहा था, अब जब टाइम मिल रहा सो नहीं रहा है तो नींद उड़ गई अभी. तेरी पिछली देखो, देखते हंसते जा रही थी क्या कर रहा है बोल के. Approximation beta 0.01, 0.02. If you get instead of 71.25, say if you get 73 rupees, gone. You got 71.27. Fine beta, चलेगा. सायराम आंसर आया. Present value factors match हुए. कौन सा क्वेश्चन कर रहे हो दोनों? इसमें ही है. अरे कौशिक क्रॉस చెక్ చేస్తున్నావా ఆన్సర్? आयुषी राइट हो गया तेरा आंसर मैच हुआ? वही नहीं हुआ बस. हो गया क्या? यस. आंसर आया क्या? नॉट रिक्वायर्ड. डन. There's one more person solving, but I will just wait. आराम से कर, टेंशन में मत आ कि मैं अकेला बचे सो क्या बोल के. कोई रेस नहीं है बेटा. मैच हो गया? तू फेंक रहा है कुछ तो कैलकुलेटर पे लिखे मैच हो गया कर रहा है तू अभी. पक्का? All right kids. 9th question guys. Today being 1st of Jan 2019, Ram is considering to purchase an outstanding corporate bond having a face value of 1,000 that was issued on 1st of Jan 2007. What was the original issue date as such beta? Irrelevant. ठीक है? Because we are valuing the bond as on 1st Jan 2019, you will have to take the remaining maturity from the current date, which has a 9.5% annual coupon and 20 years of original maturity. That is, they're maturing on 31st of December 2027. The bond was issued 12 years ago with a total maturity of 20 years. So what will be the remaining maturity today? The remaining maturity beta will be 8 years. कर ले count. फर्स्ट Jan 2007 नहीं बेटा, ये डेट गलत है. Please make this 2026. Because if it was issued on 1st of Jan 2007 as such beta, then the maturity date beta for 20 years should be 31st December 2026. Please make that 2026, guys. Since the bond was issued, the interest rates have been on downside and it is now selling at a premium of 125.75 rupees per bond. So the current market price beta is 1000 plus 125.75, that is 1125.75. Determine the prevailing interest rate on similar type of bonds if it is held till the maturity, which shall be at par. When they say prevailing interest on similar type of bonds as such, guys, what are we expected to compute? YTM of this bond. But because present value factors are given, guys, you will have to compute YTM using IRR method rather than using shortcut method. You will not directly use the formula, guys. You will have to discount all the cash flows as such beta at 6% and 8% and then compute it. समझ में आ रहा है नहीं आ रहा है? वो लिख लो बट एक बार. As present value factors are given, as present value factors are given, as present value factors are given, the prevailing interest that is yield, the prevailing interest that is yield, prevailing interest that is yield should be calculated. Prevailing interest that is yield should be calculated using YTM method. So using IRR method. The prevailing interest that is yield should be calculated using IRR method. Alright guys, you can write the details better and then start solving. What's in the answer? Sleepy. You have exam today. You have to... I thought it was from today. Semester 5, no? Semester 5 kada? Ninth one, guys. Write all the given details properly, guys. Face value kitna hai? Face value is 1000. Original maturity beta was 20 years, but remaining maturity is 8 years. Yeah, after that only it is 8 years. Remaining maturity beta is 8 years. 2019, 2020 and then 6 आगे के. Remaining maturity is 8 years. What is your coupon rate, guys? Coupon rate is 9.5%. So your annual coupon amount will be 95 rupees. Okay, break was you're sleepy like this. One day also holiday if you get, we tend to be sleepy, no? That is why every day we are like this only. Coupon rate is 9.5%. Your annual coupon amount beta is 95 rupees. Current market price kitna hai beta? It is trading at a premium of 125.75. So that will become 1125.75 rupees. This is your current market price. You will have to compute YTM beta using IRR method. नहीं बेटा redeemable always at par. आज का market value is changing because of changes in interest rates. I'll talk about that. But then on redemption, nothing is given. It is always redeemable at par value. Nimit, are you done? कितना है देखो YTM? 7.406. You will directly take 6% and 8% beta. You will have to not consider 7. जो भी present value factors are given in the question, use them only. To compute YTM beta using IRR technique. What are we going to write beta? At 6%, guys, first present value will be equal to, use your coupon amounts, guys, 95 rupees, multiply that by present value annuity factor at 6% for 8 years. Please consider present value factors given in the question. And redemption value beta will be 1000 rupees multiplied by present value factor at 6% beta for the 8th year. 95 into 6.209, 1000 into 0.6274, 1217 point. At 6% beta, you'll get the present value of the cash flows as 1217.34. गलत है ये. You have to use the factors given in the question. ये 6.209 करेक्ट है. और ये कितना है पॉइंट. देखो 4 कहां से आया. लेकिन क्वेश्चन में प्रेजेंट वैल्यू फैक्टर्स दिया हुआ है क्या? शुडंट बी यूज ओनली देम. तब से तो चिल्ला के बोल रहा हूँ यार मैं. हाँ हाँ कहते. How much is this, guys? 1216.85. At 6% beta, the present value of the cash flows is 1216.85. Please check. Are we all done? You will have to also compute at 8%, guys, and then do it on a proportionate basis. आ गया केशव आंसर देखो. कितना आया यार. अभी वो लाइना बना रहा है. Oh my god. Not permitted, but अगर difference आ रहा है तो you will end up losing marks. The whole objective of giving present value factors in the question is to ensure that every student gets the same answer. If they are not given, then there can be an approximation error. If they are given, error नहीं आना चाहिए ज़्यादा. अगर तो खुद के factors use करके कर भी देता है, if there's just marginal error, it is still fine. But if you end up getting a little higher error, then you will lose marks. क्योंकि यहाँ पे valuations are pretty high, it will not make any difference on IRR. मतलब वो 2 decimal points तक correct ही आएगा, so ठीक है. You got IRR? You think how much did you get? 6.7. You know that proportionate difference is for 2%, right? And not for 1%. You took it for 1%, no? कितने हर बैच के बाद यही गलतियां. सेम स्टैंडर्ड. अपन मतलब हाँ तू हाँ. यस बेटा. मार्क्स थोड़े ऊपर नीचे होते हैं बस, ठीक है ना? Yes, kids, did you all get the answer? At 8%, beta, what will be the present value? You will write 95 rupees multiplied by present value annuity factor, beta, at 8% for 8 years, plus 1000 rupees multiplied by present value factor at 8%, beta, for the 8th year. How much is your present value annuity factor, guys? At 8% for 8 years, 5.746 rupees, beta, into present value factor is 554. Only 54. How much will this be, beta? 1085.87. This will be the present value, guys, at 8%. At 6%, it is 1216, beta. इसके बाद में वही bridge बनाओ, 2 line मार के, and then do it on a proportionate basis. You got the answer now? 7.391. You got the same present values now? Do you get the same present values or not? 1216.85. You did not write them. Same only, no? Right. You're still sleepy? At 6%, but it is 1216.85. At 8%, it is 1085.27. After this, you will have to do it on a proportionate basis. Sairam, kitna hai answer? 7.391. 139 तो नहीं है ना? क्या नंबर्स घूम रहे तेरे को भी? कॉल करो आमिर खान भाई को. At 6%, beta, it is 1216.85. At 8%, it is 1085.87. The total difference, beta, from here to here is how much? 130.98. You would want to stop at 1125.75. The difference that you want to start, beta, is 100. 91.105. 91.1. कहाँ से आ रहे बेटा 05 तुम्हारे को अभी? Proud of you, beta. For 2%, guys, the total change is 130.98. For 91.1, what shall be the proportionate change, guys? 1.391. Therefore, guys, your yield as such, beta, would be equal to 6 plus 1.391, that is 7.391%. The prevailing yield, beta, would be 7.391%. Did you all get this? The yield on these bonds, beta, would be 7.391%. आ गया वरुण आंसर? Yes, kids. Are we all done? Which one, beta? The previous question. नहीं बेटा, yield हाँ 4 or 5, that's it. 8 marks का है उसमें. All right, guys. Let's go back to the concept book, guys. Concept book, बेटा. क्या हुआ? ये क्वेश्चन सॉल्व करना शुरू कर दिए? कॉन्सेप्ट बुक है ना तुम्हारे पास? लिखो ना यार उसमें फिर. कितने आलसी हो रहे तुम लोग कि बैग से बुक निकालना अभी बोल के. You want a 5 minutes break? Oh my god. Alright, kids, let's take a break. G Drive students, there's no break, beta. You can take as much as break as you want. I'm pausing the recording. Online live students, beta, the stream continues. We have a break of 5 minutes. People would want to sleep here. ऑनलाइन स्टूडेंट्स सेशन रिज्यूम हो चुका है बेटा. अंकित विल एक्सप्लेन अस द नेक्स्ट कॉन्सेप्ट बेटा. क्या है रे बोल. क्लास शुरू हो गई बोल रहा, फिर भी चिल्ला चिल्ला के बात कर रहा है यार तुम लोग. In the concept notebook, guys, the ones who still want to talk, guys, can leave the classroom immediately. Have some manners, guys. You're not sitting in office. Let the next writing better. Relation between bonds value and changes in interest rates. Relation between bonds value and changes in interest rate. Changes in interest rates. Now guys, we all know better that the cash flows that you're going to realize from a bond are all going to remain constant. Cash flows will not change. So if it's an 8% bond as such beta, face value of 1,000 rupees, say redeemable after 5 years, the coupon amount will always remain at 8% of 1,000 only. The maturity value will remain at 1,000. Cash flows from a bond are not going to change. However, the prevailing interest rates in the market can change. If there is a change in the prevailing market interest rates as such, the value that the bond will fetch can also change, only because your cash flows are fixed. Taking an example of an 8% 5-year bond beta, face value 1,000 rupees. If the required rate of return beta, or if the prevailing yield is say 8%, what do you think will be the value of the bond, guys? If the yield is 8%, what will be the value of the bond? 1,000. You do not even have to calculate, guys. A bond that is redeemable at par, and if the required rate of return is exactly equal to its coupon rate, the bond should be trading at par value. Only if the bond is redeemable at par. If the bond is not redeemable at par as such beta, then there will be a difference in valuation. So here, if it is 8%, even if you use that formula beta, present value will be 80 rupees multiplied by PVAF at 8% for 5 years plus 1,000 rupees multiplied by present value factor at 8% for the 5th year, guys. You will exactly come back to 1,000 rupees. Are we understanding this? ये पूरे MCQs में आ सकते हैं बेटा. So a bond beta which is redeemable at par, if the discounting rate is equal to its coupon rate, the bond should always be trading at par value. That's the first thing. What if the required rate of return decreases to 7%? When you've invested in the bond as such beta, the yield was 8%, and let us say immediately after you purchased the bond, there have been changes in the prevailing market interest rates as such, guys, and that is why the yield has come down to 7%. If the yield has come down to 7% as such beta, the bond should now be trading at a premium. When I say bond should be trading at a premium, this coupon, this debenture beta is offering you a coupon of what percentage? 8%. But people are not expecting 8%. People are expecting only, if people are expecting a lesser return than what is being given by the company in the form of coupons, don't you think the bond, people will be placing a higher value on the bond? The bond will now fetch a premium as such beta. So the present value, can someone calculate, guys? 80 rupees into PVAF at 7% for 5 years plus 1,000 rupees into present value factor at 7% for the 5th year. 1,041 rupees beta will be the value of the bond. So in case you invest in this bond beta when the yield was 8%, and after that if the yield decreases to 7%, the value of the bond will immediately increase to 1,041 rupees. समझ में आ रहा है नहीं आ रहा है? On the other hand, beta, say after you invest, yields increase to 9%. If the required rate of return, guys, is more than the coupon rate, and the bond is redeemable at par, the bond will start trading at a discount in the market. The bond's value will be less than 1,000 rupees par value. It is only if you pay a lesser amount for the bond, you will get your return of 9%. You are getting 8% in the form of coupon, but you additionally want 1%. What is your required rate of return beta now? 9%. So if you are getting 8% in the form of coupon, but you want that additional 1% also, how will you generate that 1%? in the form of capital gain. If you want a capital gain, that means you will want to pay less for that bond. Only if you pay a lesser amount, guys, you will get that required return of 9%. So at 9%, beta, present value will be equal to 80 rupees into PVAF at 9% for 5 years plus 1000 rupees into present value factor, beta, at 9% for the 5th year. 961.1. The value of the bond will immediately decrease to 961.1. This is why they say, beta, that if you have surplus funds which is to be invested for a temporary period, say you have a surplus amount, you need that amount after 3 months. If you put that money, guys, in longer maturity bonds, there is still a huge amount of risk. After you invest, imagine the interest rate changes. If it is decreasing, guys, well, for good for you, you will end up making a gain. But what if the interest rates increases? Won't the value of the bond decrease? तुम लोग fixed income security सोच के बेटा, you invested in a debenture. You paid 1000 rupees for that debenture. But the debenture, beta, that you have invested in has a maturity of say 5 years. Immediately after you invested in that debenture, there was a change in the prevailing market interest rates and the rate has increased to 9%. What do you think will happen to the value of the bond? It will come down to 961.1. Now, if you want to exit after 3 months, won't you end up incurring a net loss only? You paid 1000 rupees, beta, and you will get only 961. This is why we always talk about, beta, that your investment, maturity of the instrument in which you are investing should always match with your investment period. If you're investing in if you have surplus money, beta, for 5 years, you can invest in a bond whose maturity period is 5 years. If you have surplus money for 10 years, you can invest in a bond, beta, whose maturity period is 10 years. Unless you yourself want to speculate. Just if you are expecting that the interest rates will come down as such, beta, and that is why you will put your money in longer maturity bonds. Then, if the interest rates actually come down, won't you end up making a gain? I was telling you, beta, that many bond mutual funds gave a return of approximately 10%, 11% as such, beta, in the last 1 year. That 10%, 11% is not in the form of coupon payments. That 10 or 11% differential jo extra 2-3% aaya, that is because of price gain. Last 1 year, mein beta, long-term bonds have reduced in, increased in prices because the long-term yields have reduced a little. Everyone is expecting that the rate cut is expected soon. Prices of long-term bonds have already adjusted. वैसे बेटा 2017, 2018 bond market gave a return of 12-13%. क्योंकि वहाँ पे उसके पहले बेटा interest rates were high and then they started reducing interest rates बेटा drastically. So there was a heavy increase in the price of the bonds because the required return decreased. Are we clear? So if they ask us the relation between interest rate, guys, and the market price, if the required rate of return is exactly equal to coupon rate, bond should always be trading at par value. This is what happens whenever new bonds are issued. ये अपन theoretically पढ़ते बेटा, bonds issued at discount, bonds issued at premium. Real life it doesn't work like that. All the bonds are directly issued at face value, par value. No one is issuing bonds at discount or no one is issuing bonds beta at a premium. Why do they issue at par value beta? Because they match the coupon rate exactly with the required rate of return. If a AAA rated bond should fetch 8%, they will offer directly a coupon of 8%. If they're offering a coupon exactly equal to required rate of return, shouldn't the bond be issued at face value? But after that, prices do not remain at par value. Once the bonds are issued, guys, can there be a change in prevailing market interest rates? As the prevailing market interest rates keep changing as such, the value of the bonds will keep fluctuating. Are we clear? Over time as such, now because we are expecting a decrease in interest rates, you will see most of the bonds are trading at premium. They'll be trading at a value higher than face value. Is that part clear? Yes or no, guys? First is this, beta. समझ में आया नहीं आया ये part? The next part, beta, is if the interest rates are constant, what do you think will happen to the price of the bond over its maturity period? Just say right now, beta, the value of the bond, let us say, is 1041 at an yield of 7%. What do you think will happen to the value of the bond as such, guys, over a span of 5 years? The price of any bond over its maturity period should gradually come to its redemption value. Whatever be the redemption value. If it is par value, it will gradually reach its par value. Doesn't matter even if it is discount, even if it is trading at a discount or even if it is trading at a premium. जैसे तू पूछा था 1125.75. Previous question, but the current market price was 1125.75. That does not mean over the next 8 years price will remain at 1125.75. Every year you will see that the value of the bond is gradually decreasing and it will come to its maturity value, beta, that is 1000 rupees. अब जैसे बेटा यहाँ पे 1041 rupees is the prevailing market price. अगर 1 year lapse हो चुका है, after 1 year guys, what will be the remaining period to maturity? 4 years. What do you think will be the value of the bond, beta, based on that maturity period of 4 years? You will discount 80 rupees, beta, at 7% for 4 years. 1000 rupees will be discounted at 7% for the 4th year. समझ में आ रहा क्या बोल रहा हूँ? After 1 year, the remaining maturity period, beta, will be 4 years. Use check battery అయిపోతుంది. చేస్తున్నా కదా పిల్లలు. 1033.87. It decreased from 1041 to 1033.87. You wait for 1 more year, beta, it will reduce further by 89 rupees. Another 1 year it will reduce further by 89 rupees. Gradually it will reach 1000. You can explain this, beta, with the help of this table as well, guys. समझ में आ रहा है क्या बोल रहा हूँ? The value today, beta, was 1041. On that you want a return of how much? You will add return at the rate of 7%. How much is 7% of 1041? 72.87. But what is the cash flow that you will realize in the form of coupon? 80 rupees. What will be the value at the end, guys? 1033.87. यही तो आया था ना यहाँ पे भी, मतलब even if you discount this, beta, you're going to come back to the same value. Next year, beta, 1033.87 पे you will be expecting a return of 7%. 72.37. Cash flow will be 80 rupees. Value of the bond, beta, will be 26.24. This will what happen, beta? This will gradually come down to 1000. So if a bond is trading at a premium, the premium amount will gradually reduce. If the bond is trading at a discount, the discount amount will gradually reduce. Doesn't matter whether it is premium or whether it is discount. Let's say if the yield is 9%, beta, the value of the bond today will be how much? 961.1 rupee. What do you think will happen to the value of the bond over its maturity period? It will increase. It will reach its maturity value of 1000 rupees. समझ में आ रहा है नहीं आ रहा है? All of this, beta, can be asked as MCQs. इसीलिए बोल रहा हूँ. Are we very clear about this? लिखो बेटा. Relation between क्या लिखे? Bond value and changes in interest rates. Get on. If the required rate of return, if the required rate of return is equal to coupon rate and the bond is redeemable at par, the bond is redeemable at par, the current market price will be equal to par value. The current market price will be equal to par value. The current market price will be equal to par value. Par value. Next. If the required return is more than the coupon rate, if the required return is more than the coupon rate, the bond will be trading at a discount. The bond will be trading at a discount. The bond will be trading at a discount. Bond will be trading at a discount. Similarly, next line, beta. Similarly, if required return is less than the coupon rate, if the required return is less than the coupon rate, if required return is more, the bond will be trading at a discount. because you will want to pay less so that you generate that higher return. If required return beta is less than coupon rate, the bond will be trading at a premium. The bond will be trading at a premium. समझ में आ गया 1125 वाला? The bond will be trading at a premium. इसके नीचे example 8% 5-year bond, face value 1,000 rupees. 8% 5-year bond, face value 1,000 rupees. Face value 1,000 rupees. Right, all of these values better at 8%, 7% and 9%. 8%, 7% and 9%. Eight percent, 7% and 9%. But लिख लिए पूरे values. At 7% it is 1041. At 9% it is 961.1 rupee. Any doubt in this? Now, next line. If a bond is trading at discount or premium, if a bond is trading at discount or premium, the amount of discount or premium will gradually reduce. The amount of discount or premium will gradually reduce if a bond is trading at discount or premium. The amount of discount or premium will gradually reduce over the maturity period. Will gradually reduce over the maturity period. Over the maturity period. And the value will be equal to its redemption. The value of the bond will approach redemption value. The value of the bond will approach redemption value. The value of the bond beta will approach its redemption value. Is that clear? Example. If yield is 7%, current market price कितना था बेटा? Current market price was 1041. After 1 year, price will be equal to, you're going to discount cash flows for 4 years. 80 rupees into PVAF at 7% beta for how many years? 4 years. Plus 1000 rupees into present value factor at 7% beta for the 4th year. कितना बेटा ये? 1033.87. Price is coming down from 1041 rupees to 1033.87. इसके बीच में बेटा if interest rates are changing on account of that, price of the bond will definitely change. Keeping the interest rate constants, what should happen to the value of the bond is this. Whether it is discount, whether it is premium, does not matter as such better. So after 1 more year, guys, after 1 more year, what do you think will happen to the price? 80 rupees into PVAF at 7% for how many years? 3 years, plus 1000 rupees into present value factor at 7% beta for the third year. The value of the bond will further reduce to 1026.24. 1026.24. समझ में आ गया बेटा ये भी? Now, same thing with discount also beta. Does not matter whether it is discount or does not matter whether it is premium. Both of them beta should reduce over the maturity period. The impact of interest rate changes would be higher for longer maturity bonds. Shorter the maturity, lesser the impact of interest rate changes. Higher the maturity as such beta, higher would be the impact of interest rate changes. This is what is called as your interest rate risk, price risk. Price risk in bond matlab beta yahi hai that if you are buying the bond today and you want to exit before the maturity period, you may not get your desired return if there is a change in the prevailing interest rates. When will I not be bothered about change in interest rates? If I have an intention to hold the bond till the end of its maturity period, then I'm not bothered about the changes in interest rates that are happening. So imagine I buy a bond as and after that there is a sudden decrease in the prevailing yields. Bonds will be trading at a premium in the market, but I should not be concerned about it as such guys, because I know that I do not have to sell the bond now. I'm anyways holding it till the end of its maturity period. समझ में आ रहा है नहीं आ रहा है? If your intention beta is to hold it till the end of the maturity period, then this is what is this. You've learned all of this beta in the form of Keynesian theory also. कभी Keynesian का नाम सुना है बेटा? He's given a very important point guys when he's talking about needs for money. He says speculative need, transaction need, precautionary needs. Under speculative need beta he says if a lot of people are parking their money in long-term bonds, consider that the interest rates are going to reduce. Why? Because people want to gain on account of reduction in interest rates. If there is a decrease in interest rate, don't you think price of the bonds will increase? They will exit after the prices of the bonds have increased. So they say it is an indication that if a lot of money is being parked suddenly in long-term bonds, people are expecting the long-term interest rates to reduce and they would want to gain on account of the price gain there. Anyways, ये price risk क्या है समझ में आया? What is price risk guys? Once you have invested in the bond, the value of the bond will not remain same as such beta. If there's a change in the prevailing interest rates, it is going to impact the value of a bond. Longer the maturity, higher will be the price impact. Lesser the maturity, lesser will be the price impact. We just spoke about a 10% bond guys. Sorry, 8% bond, face value 1000. Maturity 5 years. Maturity 20 years. If the yield is 8% as such guys, both the bonds should be trading at, if yield is equal to your coupon rate, don't you think bonds will be trading at par value guys? Yes or no? Let us say beta that the interest rates reduces to 7%. We have computed that this is 1041. You will have to now compute the other part beta. 80 rupees into PVAF at 7% for 20 years. Plus 1000 rupees into present value factor beta at 7% for the 20th year. $80 into PVAF at 7% for 20 years, 1000 rupees into present value factor at 7% for the 20th year. 1105.94. The value of the bond here is increasing by 105 rupees guys. See guys, longer the maturity, higher the impact, because you will continue to receive that 80 rupees for the next 20 years. Though the are you not getting coupon of 8% for the next 20 years guys? So that is what is creating the impact there. If I take a 30-year bond as such beta, the price differential would be much higher. Are we understanding all of this? So what do we understand beta here is first, price risk matlab kya hai? In case you want to exit the bond as such beta, sell the bond before its original maturity period, you may not be able to fetch the value that you paid for it as such, guys, because of changes in interest rates. Any change in interest rate beta will have an adverse impact, inverse relation as such, guys, on the price of a bond. If the interest rates are reducing, price of a bond will increase. If the interest rates are increasing, price of a bond will decrease. This impact will be higher for higher maturity bonds. Higher the maturity, higher the impact of interest rate changes. Lesser the maturity, lesser will be the impact of interest rate changes. That does not mean, beta, we all start putting our money in long-term bonds now because we're expecting interest rates to come down. Long-term bonds ke prices have already got adjusted, beta, in the last 1 year. There has already been a 3-4% increase in the prices of the bonds. So right now, if you invest in long-term maturity bonds, even if you have money for short-term purpose, you may not see a huge amount of capital gain. The capital gain as such, beta, is going to be lesser only. समझ में आ रहा है नहीं आ रहा है? All of this you have to do well in advance as such, guys, not after the entire market is aware. Once the entire market is aware of it as such, beta, that means the prices are already corrected. Is that clear? Yes or no? लिखो बेटा. Zero coupon bond में price risk रहेगा बेटा. Definitely. There is no reinvestment risk. What is that? I will talk about it. I will explain something called as duration of a bond and bond convexity. उसमें पढ़ाऊंगा. Zero coupon bond, guys, also has price risk. Why can't the price of a zero coupon bond change? In fact, बेटा वहाँ पे coupon payments नहीं रहते. पूरा redemption value. Don't you think the present value of redemption value can change? समझ में आ रहा है नहीं आ रहा है? Are we clear about this, guys? Write down, beta. Interest rates and price of a bond, interest rates and price of a bond share an inverse relation. Interest rates and price of a bond share an inverse relation. Share an inverse relation. A decrease in interest rates, a decrease in interest rates, a decrease in interest rate will result in, a decrease in interest rate will result in increase in price, will result in increase in price. Higher the maturity period, higher the maturity period, higher the maturity period, higher will be the impact of, higher will be the impact of interest rate changes. Higher the maturity period, higher will be the impact of interest rate changes. Interest rate changes. Example, write this better. एक 6% पे भी वैल्यू कर लेना. Maturity 5 years, maturity 20 years. 1000, 1000, 1040, 1000, 1105.94. ये कितना है बेटा? 10 84.25. हाँ. 1229.39. 1229.39. Yes, this is just to tell you what is going to be the impact of interest rate changes beta on your value of a bond. Are we clear about this? Any doubt in this? Let's go back to solving questions beta. शक्लें कैसी हैं इन लोग की? This is one question that we left in between, guys. Question number 6. साइड में ही रख लो ना यार, बार बार. Question number 6, guys. There is a 9% 5-year bond issue in the market. The issue price is 90 rupees and the redemption price is 105. For an investor with a marginal tax rate of 30% and a capital gain tax rate of 10%, assuming no indexation on bond beta capital gains computation, they're telling us that indexation does not apply. What will be the post-tax yield to maturity? You can first compute, guys, what will be YTM ignoring taxes, then we will do YTM with taxes. Pehle ignore taxes, guys, and then compute YTM. That is not required in the exam, that is only for our understanding, guys. Because the market prices are closer to 100 rupees, guys, you will have to assume the face value to be 100 rupees. They did not give us face value, guys, but then the issue price is 90 and the redemption price is 105. So you will take the face value beta to be 100 rupees. Take face value as 100, coupon amount will become 9 rupees. कितना है बेटा YTM? Ignoring taxes. कितना आया? 11 point 12.3. क्या हुआ निमित? कौन सा क्वेश्चन में तू? With the taxes, how much? 8 point. Guys, question number 6 beta. Issue price, that itself will be your purchase price beta. Issue price is 90 rupees. Redemption value beta is given as 105. Face value will be considered to be 100 rupees. Your interest amount, guys. Maturity कितना? 5 years है ना? Maturity is 5 years. First case, guys, ignoring taxes. This is not required in exam. Ignoring taxes, what will be your YTM beta? Coupon rate कितना है? 9 rupees, 9%. So 9 plus redemption value beta is 105 minus 90 divided by 5 years, whole divided by 105 plus 90 by 2. This will become 12.307. क्या करा था तू? redemption वाली 100 रुपए लिया. Face value is 100 beta. YTM, guys, will be 12.307% ignoring taxes. Did you all get the answer? With the taxes, guys, what will be the amount? एक बार try करो, guys. With taxes, you know that interest income is subject to a tax rate of 30%. Well, your capital gain is such beta is subject to a tax of 10%. 9.23. कृषा कितना आता देखो? 8 point. You ignored capital gain. You took capital gain tax, no? Capital gain beta will be payable on 15 rupees. 1.5 rupees will be your capital gain tax. तो किस पे ली capital gain? 9 into 0.7 is correct beta, that is net of taxes. Into 0.9 इसमें थोड़ी आएगा, it is only on capital gain, no? Why will you pay that on 9 rupees? You will pay interest income पे normal tax beta, on capital gain you will have to pay capital gain tax, not on your interest income, right? Ignoring taxes, guys, your YTM is 12.307%. Did you all get this? With the taxes, guys, what will be the interest income beta net of taxes? Interest income net of taxes beta will be 9 rupees minus 30%, that is 6.3 rupees. Yes or no, guys? What will be your capital gain beta? Capital gain, guys, will be 105 minus 90, 15 rupees. Capital gain tax beta would be, on this 15 rupees, you will have to pay a tax of how much? 10%. 15 into 10% beta 1.5. When is this payable, guys? Today or at the end of 5th year? This is payable, obviously, guys, at the end of 5th year. You are not going to pay that tax amount now. Therefore, guys, redemption value to be considered will be, how much will you receive, guys, from the company? 105. From that, you will have to deduct a tax of 1.5. You will directly take a redemption value of 103.5. You're getting 105 from the company, guys, but you will have to immediately shell out 1.5 rupees in the form of capital gain tax. So the net amount that you're going to receive is only 103.5. Formulas are same. Instead of interest income, you will now take 6.3 rupees. Instead of redemption value 105, you will now take 103.5. समझ में आ रहा है क्या बोल रहा हूँ? इंटरेस्ट इनकम की जगह बेटा यू विल टेक 6.3 रुपीज, रिडम्पशन वैल्यू की जगह यू विल टेक 1 बेटा तुम लोग क्या करें, इनटू 0.9 करे चलेगा, बट वो डिनोमिनेटर पे इंपैक्ट नहीं आ रहा है तुम्हारा. योर न्यूमरेटर इज परफेक्ट. Even if you write 105 minus 90 divided by 5 years, you're taking 3 rupees. That multiplied by 0.9 is 2.7. Even I will get 2.7 only. But denominator mein it should be 103.5 plus 90 divided by 2 and not 105 plus 90 divided by 2. नहीं आ रहा ना बेटा, टेकिंग डिफरेंस के ऊपर इनटू 0.9, so that is still correct. Even if you write into 1 minus 0.9 बेटा 0.1, that is still fine. ये समझ में आया मैं क्या लिखा पहले? एक सेकंड सुन लो बेटा. So we are writing interest into 1 minus tax rate plus redemption value minus whatever is your purchase price by n into 1 minus tax rate. चलेगा, no problem. But यहाँ पे when you write redemption value as such बेटा, this should be net of tax. That is why directly write redemption value only net of tax and get done with it, guys. You do not have to worry about multiplying into 1 minus tax rate again. समझ में आ रहा है नहीं आ रहा है? I will not write into 1 minus tax rate because I'm taking redemption value net of taxes. So this, guys, will become interest income कितना है? Without yawning, it is 6.3 rupees plus 103.5 minus 90 divided by 5 years whole divided by 103.5 plus 90 divided by 2, guys. कितना हो जाएगा ये? 302% बेटा will become your YTM. Whoever got 9.23% beta, तुम्हारा numerator correct है. Only change that is to be done is in the denominator. You should take redemption value net of taxes. Are we understanding this? Redemption value, mat beta. Redemption value should be net of taxes, guys. So that 105 minus 1.5. Timing of cash flow is important, guys. You're going to pay that at the end of 5th year. We're making that adjustment. You can copy this, guys. $105 minus 90, 15 रुपए पे इफेक्ट आ रहा है. That is nothing but your capital gain. Are you not writing 105 minus 90 into 1 minus 0.1 better? Redemption value to be considered, guys, is 1 they haven't asked this again better. This is a question बहुत पहले का. They're not asking with taxes in the examination. They will normally ask YTM. Yes. डिनोमिनेटर में इंटू 1 माइनस टी करे ना बेटा, लग जाएगी. बिकॉज इफ यू एड देम, गाइज, यू आर नॉट टेकिंग डिफरेंस के ऊपर कैपिटल गेन. 105 प्लस 90 अगर लिए तो सोचना बेटा, टैक्स इज पेबल ओनली ऑन कैपिटल गेन. डिनोमिनेटर में डिफरेंस कहाँ ले रही है बेटा तू? इफ यू ऐड देम एंड मल्टीप्लाई, हाँ, थिंग्स विल गो फॉर अ टॉस. Guys, make a note of this, beta. Did you all get 1 or 3.5? Capital gain is 15 rupees. Capital gain tax, beta, is this. Azaz, perfect, beta. I hope you have verified it. Yes, kids. Next question, beta. Are you all done with it? Question number 11, guys, first. 11th question. An investor is considering the purchase of the following bond. Face value is 100 rupees. Coupon rate is 11%. Maturity is 3 years. If he wants a yield of 13%, what is the maximum price he should be ready to pay for? And if the bond is selling for rupees 97.6, what would be his yield? He's asking us to compute better both fair value considering a required return of how much? 13%. And also compute, guys, what will be the YTM if the prevailing market price is 97.6. Second bit is to compute YTM. First bit is to compute fair value using a discounting rate of 13%. You can directly arrive at the values better. आगे आंसर या नहीं? काश ऐसे एग्जाम में आना ऐसे आते आते टेंशन. कितना है बेटा देखो? 95.2 करेक्ट है. 95.277 निहारेगा आराम से. हाँ, arrive at the value of the bond, guys. You're going to discount all the future cash flows at a rate of 13%. 11 rupees into PVAF at 13% for 3 years and 100 rupees into present value factor. First bit के लिए you will use YTM as 13% and then take purchase price as the missing. अभी थोड़े टाइम पहले बोला था do not do that. It will result in an approximation error. कभी भी अगर वैल्यू पूछता है बेटा, you should compulsorily compute present value of cash flows only. Yes, but are we all done? What is the coupon rate, guys? Coupon rate is 11%. Face value is 1000 rupees. Your coupon amount beta will be 11 rupees. Maturity period beta is 3 years. Using this, you're going to get the present value of the bond, guys. So yield kitna hai beta? Yield is 13%. So the fair value based on this yield is such, guys, should be 11 rupees multiplied by PBAF at 13% for 3 years, and then beta 100 rupees multiplied by present value factor at 13% for the third year, guys. This will give us the fair value of the bond 95.27728. 95.28, guys, should be the fair value of the bond. Second bit mein beta, we already know that the prevailing market price is how much? Market price is 97.6. They're asking us to compute YTM if the bond is purchased today and held till the maturity date. What will be the YTM, guys? Formula is interest amount plus redemption value minus purchase price by N, whole divided by redemption value plus purchase price by 2. Your interest amount, guys, is 11 rupees. Redemption value is 100. Purchase price is 97.6 divided by 3 years, whole divided by 100 plus 97.6 divided by 2. YTM beta will be equal to 9433%. 11.9433% beta will be the value. (11.9433%) beta will be the value. Next beta, 12th. Please check, guys, if you all got the answers. Market price is 95.277. YTM is 11.9433%. Google हो गया ये? Next question beta, question number 12. Calculate the market price of, first bit, 10% Government of India security, currently quoted at 110, but interest rate is expected to go up by 1%. The current rate amount beta is 110. It's a 10% Government of India securities. Because the market price is closer to 100 rupees, what will you take face value to be? 100. They're asking us to recompute the price of the bond as such beta if the interest rate is expected to go up by 1%. Undoubtedly price will reduce as such, guys, but then what should be the price happen? पूरा question complete है क्या वो या नहीं? Excellent. Maturity period is not given. It was exactly like this, but given in the examination also. November 2010, that was my attempt. Huh? So you will have to assume maturity period, preferably perpetual bond. If maturity is not given and certain calculations are to be made beta, we always assume the bond to be a perpetual bond. Write that beta. First bit ke liye note. As maturity period is not given, for the first bit, write that note, guys. As the maturity period is not given, we will assume it to be a perpetual bond. As the maturity period is not given, we will assume it to be a perpetual bond. We will assume it to be a perpetual bond. Assume it to be a perpetual bond. You can start beta now. So using the prevailing market price of 110 rupees beta, you are going to arrive at what? ठीक है, तुम लोग करो बेटा. I'll wait for a minute. All of you try to figure out the answer, guys, now that you know that it is a perpetual bond. Guys, how do you know that the required yield is 11% after changes in interest rate? Where is it given that the current yield is 10%? You cannot write 10 rupees divided by 11%, beta. That is not the answer. Please try to figure out. You will have to first compute the prevailing yield, guys. How will you compute prevailing yield? Using the current market price of 110 rupees. You know the current market price, you know the cash flow, guys. Can't you compute the current yield? Once you get current yield beta, you can increase that by 1% and that will become the revised yield. Once you get that revised yield as such beta, you will get market price of the bond. What's the revised market price? When they say that interest rate is expected to go up by 1%, they're talking about prevailing market interest rates. Can a bond whose coupon is fixed beta change their coupon rate? Because coupon rate is fixed, changes in interest rates will impact market price. If coupon rate was also not fixed as such, guys, why will the price of the bond change? नहीं समझ में आया अभी भी. Your present yield, guys, is 9.0909%. Correct? How will you compute the present yield, guys? I asked you to assume this to be a perpetual security. 12th question only, no? First bit. How do you value a perpetual bond, beta? Value of a perpetual bond, guys, is cash flow divided by R%. Present scenario देख लेते हैं. At present, beta, market price is how much? 110. So I will write 110 is equal to 10 divided by whatever is the current yield, guys. What is your current yield? 10 by 110, it will be 9.0909. उतना ही आया ना? 9.0909%. Revised beta. What is changing, guys? Yield. How much will be your yield as such beta? It is expected to go up by 1%. So that will become 10.0909%. Cash flow will still remain at 10 rupees. It is still interest divided by whatever is your yield percentage is such, guys. So that will be 10 rupees divided by 10.0909%. कितना हो जाएगा बेटा? 99.09. अरे तू कैलकुलेटर दे सर पे मार पे. 91 बते पूरा. Yes, guys. The revised value of the bond will become 99.09. Understood? You will have to arrive at the correct. कुछ समझ में नहीं आ रहा बेटा, given information लिखो, automatically answers आ जाएंगे. समझ में आ रहा है बेटा? थर्ड बेंच. 99.09 is the value of the bond, guys. There's one more bit better. There are 2 bits in the question. Second वाला भी खत्म कर दो, निकलो फिर यहाँ से. That is very simple, guys. ये समझ में आया नहीं आया? To value the bond, you needed cash flow, you needed discounting rate. Cash flow is already known. Discounting rate नहीं मालूम था. All that he said बेटा was that discounting rate is increasing by 1%. So existing discounting rate मालूम रहना है. इसके लिए he gave the prevailing market price. At present market price is 110, based on which your required rate of return is 9.0909. That is increasing by 1%. So we are taking the revised required rate of return to compute the revised value. 1% ही तो है ना बेटा, ये भी परसेंट ही है. 10.0909%. 1% of 9.09. अरे guys, if interest rates increase by 1%, guys, it is 1%. It is not 1% of 9.0909. क्या interpretation रहता है यार? Every batch creativity increases. समझ में आ रहा देखो अभी, इसलिए देखो 9.11 कुछ तो आ रहा है ना रिटर्न. Arrive at the answer to the second bit, guys. हो गया वो भी. सिर्फ क्या सेमी एनुअल कूपन पेइंग बॉन्ड है ना, 2 years मैच्योरिटी. हाउ? हो गया केशव, आंसर आ गया. साथ में नहीं बैठ रहा. हाँ, if you still have any doubt in this question beta, please ask. Are you all done with the first bit? Arun हो गया. Second bit भी हो गया. Second bit, guys, it's a semi-annual coupon paying bond. You have to arrive at the fair value of that bond beta by discounting the cash flows. Arrive at the fair value of the bond by discounting all the cash flows. The answer, guys, to the second bit. Can you tell me what's the semi-annual coupon amount, guys? मैं directly answer लिख रहा हूँ बेटा. 375 into PVAF. What is the discounting rate per annum? So that'll be 3%, guys, for every 6 months. 4 periods. Plus, what is the redemption value? 10,000 multiplied by present value factor at 3% for the 4th period. How much will this become, guys? 10,278.7, guys. This will be the required value. Is everyone done with this? Yes or no, kids? क्या और स्माइल करते जा रहा तो? Correct, I will answer. All right, beta. Question number. Homework तो शुरू हो जाएगा ना बड़ा अभी. Question 16 is homework, guys. Very small question. All right. 16th one is homework. कुछ भी नहीं है. Try to figure out. Plus. It's simple, guys. Try to figure out. I'll discuss the question tomorrow. Online students, end of the session. See you guys tomorrow. Bye bye.